20 hours on the Ndalama Insights Business Show, a program that gives you the best and most practical, actionable insights.
The microphone is closer. Yeah. All right. It's 0722, and of course, we're back with today's edition of Ndalama Insights. Welcome, welcome. So today we're about to break down a complex financial topic once again so that we can make it easy for our listeners to understand. My name is Lina Zulu, and today we're tackling a very hot topic that sparked quite significant debate in the financial sector lately. And this is the question on the table today. Can increasing Zambia's bond quantity meet investor demand without stifling business lending? All right, so our guest in studio is our financial expert, who is no stranger, but we will introduce her anyway, just in case you're tuning into the show for the first time. This is Mukonki Mukonkela from Insight Partners. And of course, we welcome you. How are you today?
How are you, Lina?
I'm great. How are you?
I'm fine. And how's everyone listening? It's cool out there. I love it.
It's very cool, yeah.
It's the perfect weather for wealth building, Lina.
Mm-hmm.
Yeah.
Okay. Wealth building, this is the weather. So if you're looking at, building wealth, I don't know how. Mukonki now is a meteorologist. Wealth building and this weather, because you don't sweat too much, I guess. Yeah. We're making the money.
Yeah.
All right. So as we know, the Zambian government recently witnessed an oversubscription of its GRZ bonds in October 2024. I think we mentioned this with Mukonki last time we're here.
Yeah.
Meaning that there was more demand than the government initially offered, put out on the market. So this then raises an important question. Should the government increase the amount of bonds it offers, given this high demand, or should they just scale back to prevent unintended consequences? What's your taking point?
Thanks, Lina.
Just bring a microphone a bit closer.
All
Just a bit
right.
more closer. Yeah.
There we go. So this is really, really interesting. And but to answer your question directly, I believe if the demand is real, we are actually seeing interested local Zambian investors in our bond market, then I would seriously consider or recommend that we look at this issue seriously in terms of increasing the bond quantities available for local investors. However, there are concerns that increasing the quantity of bonds issued by Bank of Zambia might lead to what is referred to as crowding out, which simply means that financial institutions would prefer lending to government than lending to businesses. And this therefore reduces the amount of money available for lending to businesses, particularly the small businesses. And this is a concern that's been there for years, Lina. I remember in my 20s hearing this discussion, but it never really, like so many things I say here, it never really clicked. Like, what do they talk about? But now that I'm older, I actually understand pretty well what this dynamic entails. So that is the situation. A lot of concerns. If government increases the quantity, won't that affect lending to small businesses?
Right. Let's just break it down now. What does that mean if banks prefer lending to the government instead of businesses?
So why banks prefer lending to government instead of businesses? Basically because of the risk and the return. As you might know, Lina, small businesses are quite risky lending to, and the returns for they might default. Actually, the biggest risk is that they might not pay back the loans, and many banks usually report quite significant default in terms of recovering the loans from the SMEs. But lending to government is risk-free. So if you lend to government, you are assured that you get your money back because government is a tax collector. Government can always print money if they want to. And these reasons make investing in GRZ bonds very secure. And the returns on our Zambian GRZ bonds are very, very good. We have the highest coupon that standing at around, as at September, 27.7%. That's rounded off to 28%, a 15-year tenured bond. So naturally, banks would prefer to, even you, if you had an option, you'd rather lend to somebody who's assured of giving you exactly your money back at a higher return. So that is why banks prefer to actually lend to the government rather than businesses.
So as someone who talks to many small business owners, Mokonti,
Yes.
I know it's already like quite challenging for them to access loans from banks,
Mm-hmm.
you know, because already, there's that risk involved. Won't increasing bond issuance then make it even harder for them to get the funds they need?
That's a very serious concern, and one that I seriously think we need to consider carefully. However, I believe that there are ways we can increase the quantity of bonds issued without stifling lending to small businesses. So what we need to understand firstly, Lina, let me explain how we can do this. And what we need to understand firstly is the current structure in terms of the way bonds are issued in Zambia. Right now, 90% of GRZ bonds issued, or the amount required by government, is allocated to institutional investors. These are big investors like banks, pension funds, and insurance companies. And only 10% is allocated to non-competitive bidders, where majority of us, smaller investors, fall under. We are referred to as retail investors. So take note.
That's the 10%.
90, yes. So 90%. So if government is looking for, let's say, 1,000 kwacha, 900 is going to go to institutional investors. 100 is going to go to retail investors, people like you and I. So,
wow.
Yeah.
That structure, though, what's wrong with that structure? Anything wrong with it's okay the way it is? Just 10%.
So, what that structure does is it concentrates too much borrowing in terms of bonds in institutional investors' hands rather than retail businesses. So my proposal really is to see in the longer term, and this can be phased out, how do we start increasing the allocation to retail investors and start reducing the allocation to institutional investors? Because remember, the concern is if government starts issuing a lot of bonds, these institutional investors will not be lending to businesses because they've got this government that is ready to borrow from them. So why don't we therefore reduce the allocation to institutional investors and increase the allocation to the retail investors? And again, the question would probably be, do we have enough retail investors to start investing in our GRZ bonds, even though the October results showed huge demand? And again, this is something we can talk about.
Absolutely. Yeah. Let's also just delve a bit more into bond market accessibility. What is it? What does that mean?
Thanks, Lina. In fact, for us to increase the allocation, the 10% perhaps we start increasing it to 20, 30 until it starts going up, because this would actually be better even for central bank and best for us Zambians, because we've got we can lend to government and we can also make good money in GRZ bonds. So what government needs to do is to make the bond market accessible, and this simply means that the bond market needs to be accessible to ordinary Zambians. Imagine a teacher in the village, or a farmer in Mukushi, a small business owner, being able to easily access this bond market. So market accessibility simply means allowing more people to participate in buying GRZ bonds, because they've been made easier and less complex.
Right.
So, and I believe that is what is going to get us to increase the amount allocated to retail investors.
Yes. To just include everyone, make it more open. So
yes.
How exactly can that be done? How can we do that?
So there are a number of things that need to happen for this to occur. The first one is technology. So we need user-friendly platforms for investors, and I must commend the government through the BOZ. Effective, I think it was 2023, we saw the investor portal, which for the first time in Zambia, individuals could actually buy GRZ bonds on their own by simply creating an account on the BOZ website, which we call a CSD account, and they are now able to buy GRZ bonds on their own. This is a very important milestone, and government needs to continue doing that, and also consider mobile. How can I buy bonds through my phone rather than just accessing the CSD from the website? Can I also access this and buy bonds, maybe mobile, like more like mobile money kind of setup, right? So that's the first step. The second step is education. So in as much as ZNBC and Mukongi have really tried to blow the trumpet around investments, particularly in GRZ bonds, people still need to understand these things. Not a lot of people are actually afraid and don't understand what this animal called bonds is. So a lot more education needs to happen in order for us to start increasing the allocation to retail investors. And thirdly, we also need to consider the amounts. Right now, we do have a minimum amount, and I think it's a pretty good amount. You can start investing in bonds with 1,000 kwacha, and that's a pretty good amount. But then maybe for other people, how can we even lower this to 500 kwacha, 100 kwacha, something like that? So that is the third point. Yes, Lena.
Fantastic. All right. We're discussing the potential for Zambia to increase bond quantity and how that might impact business lending. Now, Mukonki, if banks, for instance, buy fewer bonds, won't that affect their profitability? How could that hurt our banking sector?
That's a very important question, Lena. But the banking sector still has a crucial role to play. And what this might entail is that they will need to adopt their business models, and instead of relying heavily on GRZ bonds, they need to become much more creative and actually, play their traditional role of lending to businesses and individuals, which is more sustainable for them and should be much more profitable if they manage their risks.
Okay.
So for me, I think it's challenging the banks to become much more creative and not just relax because they've got access to GRZ bonds. Now, I know there's a requirement in terms of BOZ requiring financial institutions to invest in safe investments as well, which is why most of them also spend a substantial amount of their money investing in GRZ bonds. However, if Zambia is going to grow in terms of the bond market, retail investors, this is the right time for us to start focusing on retail investors. And I know there's a plan the government has in terms of capital markets. It's called the Capital Market Master Plan. I haven't really gone into the details, read this in detail. I'll spend my December reading this document, Lena, because I think it's got some plans that the government is trying to implement in terms of the bond market that I need to understand, and I will be sharing that information next year. So in December, as you guys are relaxing in Livingstone, I will be diving
as you are
deep
holidaying.
Yes.
We'll be busy cracking open some
the Capital
information.
Market Master Plan.
Yeah, absolutely. So you talked about making bonds available to regular people. How would this actually work in practice?
Okay, so imagine if a Zambian, an individual, somebody, wherever they are, perhaps even in a village, is able to buy bonds directly using their mobile phone, or the kind of mobile money setup I mentioned earlier, right?
Yeah.
Similar to buying airtime. So if the minimum amount is low, it would be very easy for them to actually be able to buy this, and it will be accessible to all. So that is what I actually mean.
Like it should be lower than 1,000. There was a question actually. Remember, I spoke to you about it. Like, yeah. What's the lowest that one can actually, spend to buy government bonds?
So the lowest is 1,000 kwacha, but I'm actually trying to advocate if the government could even lower it maybe to 500 kwacha.
Right.
And Lina, I must say, in terms of this initiative of using mobile money, Kenya tried this a few years ago. They had what they called Ikaba, which simply meant, so it was an initiative by their central bank to allowing people to buy bonds through their mobile phone, more like buying airtime, as I've been mentioning. So it's not a new thing. Kenya has tried this, and they did face a few challenges, but there were also other reasons why they faced those challenges. But for me, I think we can draw lessons from Kenya's attempt to have this mobile money GRZ bond thing, and see how we can make GRZ bonds accessible to majority Zambians. Yeah.
Let's get your concluding thoughts on our topic today, Mkonki.
So I would like to really suggest a two-phased approach. If we are going to increase the retail investment in GRZ bonds, government phase one needs to focus on building the infrastructure, technology. Yes, we've got the online CST account and investor portal, but how can we strengthen this? And also, secondly, basic financial literacy education programs, intensive, that reaches out even to villages and rural areas where people are not able to access this knowledge. And secondly, the second phase is that the government needs to gradually increase the allocation of GRZ bonds to retail investors and reduce the allocation to institutional investors, and more like restrict the amount that the institutional investors can lend to government. That is the only way we're going to flip this, and it's got its own repercussions. This is a discussion that we'll continue talking about, Lena.
Absolutely. So we look forward to hearing what repercussions those are, and if it's worth the risk. I heard the word risk today. I think that's my takeaway word.
Yes.
Yeah. Thank you once again for coming through, Mukonki.
Thank you so much, Lena, and good morning, everyone.
Good morning to you too. All right. So that's it, our dear listeners. That's today's edition of the Ndalama Insights radio program. Thank you so much for tuning in via YouTube and, of course, via ZNBC Radio 4. We hope that today's discussion has given you a fresh perspective on how bond markets could evolve to serve the broader financial needs of all of us. Until next time, keep building wealth and take charge of your financial future. My name is Lina Zulu on behalf of Mukonki Mukonkela. Until next week at the same time, goodbye and God bless.
You have been listening to Ndalama Insights Business.